now it's time for viewer mail, but we don't have viewer mail.
We don't, but
this is going to be part 2 or part 2.
Wait. Last week's viewer mail was from Victoria. Victoria, British Columbia is not French
so he's not
Canadian.
French. So part
he
2
might be French Canadian, but I don't think he is. I think he's probably part 2.
Okay, so this is Bill in Canada had a question about the Chinese currency and whether he could purchase some and invest in foreign currency.
Well, and
China.
if they're manipulating their currency and so on. There was a very broad question about the Chinese currency. And today there was an article, and I have it here in the Financial Times, that says China eases its corporate rules on the renminbi, and they're actually encouraging their state-owned enterprises, because China, the government owns a lot of businesses there, to go overseas and invest using their currency as what they pay with. So,
and this was just today that the People's Bank of China announced this move.
Yeah.
And they think it's because who is coming into town?
That's right.
Like we said in the beginning.
Who's coming to town?
President who is coming to town to visit Obama, and
this would be one way to
loosening up a little bit.
Yeah, to be nice on the way in the door.
That's right.
Yeah, that's right.
So, but this is in the article from Financial Times. They're saying that there's international banks, including HSBC, Morgan Chase, and also a South African bank, is going to be allowed to do some trading in this renminbi for settlement purposes.
Yeah, I think several of them are probably already doing this already. Banks like J.P. Morgan are global. They're going to be able to handle things like this very easily. One of the things I wanted to bring up that I thought was interesting to all of you was not necessarily that this is what China's doing, but if you think about a large institution, a financial institution, that has both a bank where it facilitates services like this. So two people went together and they sit in the middle. So if you want to sell a stock, I want to buy a stock, they sit in the middle and they facilitate the trade and they make a small commission on doing that. Or a bank could, take savers who put money into checking accounts and savings accounts and turn around and lend it out to borrowers, and they're facilitating a transaction. They're being a financial intermediary and they're making a small commission in the middle. Well, that's risk-free. Right? I mean, there's
pretty much.
It's not risk-free, but it's less risky. Proprietary trading or prop trading, you'll hear this in the press, prop trading desks are proprietary trading where a financial institution gets out in the market and takes risk with its own money. It buys stocks, it buys bonds, it buys derivatives, it buys currencies, it buys anything it wants to buy because it can obviously facilitate any of the trades it needs. And so prop trading is where they take a lot of risk with their own money. Well, one is a low-risk, low-return strategy where you're just facilitating transactions with others.
Taking your commission,
taking your return. And the other is, a speculative.
Could be very risky.
It could be very lucrative or it could be very not lucrative. So, if you think of what a bank could actually put out in risk, it could be very high, and they've had things like the Volcker rule trying to limit it, and bank investment firms now, the large ones, are dealing with it. In fact, a lot of the prop trading desk guys that were running it are leaving to start their own hedge funds because
they're going to be
the bank is
by
pulling
our
the bank.
government.
Yeah, they're starting to get rules on them, and they're
don't
like,
put rules on us. We're going out on our own.
I don't want rules. I'm leaving the big banks and starting my own. So a lot of those guys are going out on their own. I think Goldman Sachs has lost.
Quite a few.
Yeah, a few
recently.
of them. Yeah, recently. So what I wanted to tie this into you was not only to answer Bill's question, but also think about how you prefer to handle your own finances. Are you a bank? Do you want the low-risk, low-return strategy of just facilitating transactions and collecting your commissions, which you could think of that as more like a bond investor, somebody who's, investing but not taking a lot of risk. They just want their dividends and their bonds coming in all the time. Or are you more like a prop trading desk where, you want that high return, and to take that high return, you're willing to take risks and you're going to go give it a shot and put your money on the line and see if you can make some money. So, from your perspective, you got to see which way you're going to go. But as you can see, companies face that same decision. All of the big banks are facing it, and the government's trying to rein them in because when they blow up, they affect all of us, right? We've already seen that too closely recently. But if they're not that big, then they can get out and start a hedge fund and start rolling the dice and see how much money they can make. And
And to go back to the Chinese currency,
okay,
so they are starting to open up a little bit.
but nobody's taking any risk. There's no risk. In fact, what are the ways they can use the money? Foreign companies have only a couple ways to use it, right? The article says.
Yep, it says they can use it buying goods from China, depositing it in low yield accounts and bonds, or swapping it into other currencies. But it says that China still maintains a strict control over the investment from abroad. So it's not like the average person can go and invest in renminbi and
Or invest
try
in
to-
China. So if China is buying stuff, if they buy your company, you can't turn around and buy another company in China. That's not okay yet. So they're kind of opening up a little bit, but not a lot. Although they did say you can invest in Hong Kong, which I didn't know. There was small but fast-growing market for renminbi-denominated financial products that is now open in Hong Kong to international investors. So, Bill, if you're really interested, right? Hong Kong.
Go to Hong Kong.
Hong Kong and Victoria and Vancouver, the whole British Columbia area, are very closely tied. There's lots of people that run back and forth all the time. So
things are loosening up.
That's
so
right.
just wait another day and things may change.
well, yeah,
So-
that's right. Especially with who coming into town.
That's right.
That's right.
So what is your takeaway?
So the takeaway here is if you think about where you're at, are you more like a bank or a prop trading desk? That's a clue to your desires regarding risk and reward.